Welcome to Alpha Bytes, where each week you get a behind-the-scenes peek into crypto researchers doing the dirty work to find tomorrow's alpha. I'm your host, Marconi White, and today's show's hotter than King Kodi's temperature when I tell him pie charts should be illegal. I'm going to ask the guys what underrated skill they have learned since joining crypto. But first, JJ's placing bets on whether the FOMC meetings will send BTC to the moon. Cosmos is getting the third degree to find out if it's a beta play. King Kodi likes or spikes 3 projects, including Contos moving to Polygon, Gravity raising funds to build a hybrid crypto exchange, and Telegram launching a Web3 wallet. And Ray's going to ask how miners will manage the upcoming halvening. It's happening real soon. And much more. I've got Ben, Lilly, Ray, JJ, and Kodi in the studio. Gentlemen, welcome. Glad to have you here. And we're going to dive directly into the market update. JJ, in the last few weeks, we were told our audience, and we told them to avoid buying the dip and catching knives. Now BTC is catching a break and making moves north of 27K. So tell us, is this a breakout, the start of a breakdown?
Well, we'll see. So I'm back, and it seems like Bitcoin is, at least for now. Tomorrow, obviously, we have the big FOMC meeting, and Bitcoin's been catching some momentum in recent days. So kind of since the crash last month in August, I've been mentioning that this middle of September period is going to be extremely pivotal for Bitcoin's directional bias into Q4 and the end of the year ultimately. So what we want to see is Bitcoin really reverse above some key moving averages to invalidate the signal of the death cross, which we got last week. It's kind of coming up against its 200-day moving average now, which is currently around 27,700. So obviously reconquering that into the month's end would be a huge momentum gain. We see some of its shorter-term moving averages. It's been rising above recently, which is a good sign of strength. However, there's obviously the pivotal FOMC tomorrow. So you have to weigh the risk-reward of that. It does seem like the dollar's pulling back, and this is something that we've been discussing internally amongst the team. Danny and I were having a discussion about it. It's showing signs of topping, but you never know into a catalyst event like tomorrow what could happen. The market is currently pricing in that there will be no hike tomorrow, about 99%, so it's safe to say that there won't be a hike tomorrow, but what we're going to be on the lookout for is language that would insinuate that a hike could come in November, which would then obviously give DXY the strength it needs to continue this uptrend. That said, it's been up for about 10 weeks in a row straight now, so a pullback is needed. And it's very interesting right now, and this is one of the most confusing market setups I've seen, which kind of makes me want to pay attention to it even more, is that how back and forth the market's been just kind of in this range, right? Like we're at the top end of the range, and then we're at the bottom end of the range, but it's just essentially been a really wide range, and it has been for over half a year now, since kind of that March the fallout of the banking crisis in March. We've just seen Bitcoin between 25,000 and 30,000, and that's all it's been. So it does seem like we're going to get that decisiveness, right? And whether that is Bitcoin breaking back above its 200-day moving average, possibly moving back above 30,000 into the end of the month, that could be a very bullish setup. We obviously know what's ahead into the end of the year with things like the ETF decisions and whatnot. So it's definitely time to keep an eye on it. I know we've been saying that for a while, but this market is soaking up as much liquidity as it can in this range. And I do think that time's ending. So I do think we will, within the next few weeks, we'll ascend above 30,000 or down below 24,000. But we should have our moment of decision coming up here pretty soon.
Coming up pretty soon. So right now we're looking, it's likely that the Dixie is going to have a pullback. It's possible that we're not going to have a rate hike, which would look more as a pause and not actually a release of liquidity. So you're expecting if we don't see that, if during the FOMC they're saying, listen, we're not raising rates, you're expecting some more upside?
Well, everybody knows they're not going to raise rates tomorrow, so I think that's priced in to Dixie right now. I mean, obviously, if they come out and they do another hike, then we might see that blow off top in the DXY to, possibly 107 plus in a single day. But that's less than 1% chance of that, the market's currently saying. But what we'll want to keep an eye on is things like language, which is always, it's kind of a Rorschach test where people hear what they want to hear and see what they want to see. But if there's the hint that they could raise rates, obviously, at the November meeting, then you could really see Dixie regain that uptrend and kind of move on to new highs. But if that language is softer, or at least is interpreted as softer, then we could see the DXY pullback, and ultimately what it does around the 103 range, if it gets a pullback to that 200-day moving average. That's what we'll want to see for a long-term trend, but in any event, the pullback from here, as long as tomorrow isn't absurdly hawkish, should give Bitcoin some room to run in the near term. And obviously where it's sitting on the chart into the monthly close, there's like a lot of confluence that says if it can get higher from here, say break above 27,700, possibly close the weekly above there, the momentum generated. And obviously there's been a lot of short interest that's come in recent weeks. We've seen kind of perpetual market has had its longest run of negative funding quite some time over these past few weeks. So after that big retrace from 28,000 back down to the 24s, people got exceptionally bearish, so much so they possibly got ahead of themselves and possibly shorted the bottom. So if we see Bitcoin regain that momentum and all of a sudden it's in a new bull market, there's a lot of squeeze fuel there. So that's something to keep an eye on if tomorrow is more dovish than expected.
I'm going to decode and see if the Hawks are going to stay on the fence or not. Hey, Ben, I want to bring you in here. We've talked a lot about the Bitcoin milkshake. It's going to be sucking in liquidity. It's possible that we could see Bitcoin go higher if, as JJ points out, we see a relief rally as the Dixie kind of weakens. What's your thoughts here? Are you seeing the same thing as JJ, or are there some other data points you're looking at?
Yeah, seeing a lot of the same things. Not much in terms of different perspective to add. If anything, just kind of adding a little bit of color, I would say, to the FOMC discussions that are on deck here. He mentioned that let's go ahead and start listening to the language of Jerome, because I think one area the market is starting to show some uncertainty with is that will there be a second hike coming in the near future? Right now, we're about 525 to 550 basis points. The market expects there to be at least one more. It hasn't really decided when that's going to take place in the coming meetings. But you can see over the last month, there has been a change in expectation that, there might be a second one coming. And it's just slowly starting to creep into the picture. So that language, if it does result in any changes on that second rate hike discussion, there could be some movements in the market to watch out for.
So, Ben, I want to ask you about those expectations, because if you think back to about a year ago, I think a lot of commentators were perhaps caught off guard with how far the Fed went. So what's your perspective that, let's say that they come out as hawkish and we see another rate hike on that table with expectations? I mean, how much could that continue to go up if, let's say, inflation doesn't seem to be combated because of energy prices?
Well, in terms of how hard they can push that pedal down, it really comes down to the liquidity in the treasury markets. They discussed that at the Jackson Hole Symposium, and they do see some stress starting to show itself in that front, especially as they decide, hey, we're going to change collateral requirements to bank. This, again, changes liquidity parameters in the market. But as long as they have that fuel in the reverse repo, they essentially can dictate what they want to do. But right now, you can see that long-end treasury, so 20, 30 years, are starting to finally creep up and get closer to the 2-year. And now they're going to go ahead and maybe consider a second. I don't know how that dynamic is going to work out, because that's really going to kind of hurt some of the progress they've made.
Okay.
You know what I find interesting? You hit on the energy markets there. It seems like the stronger that DXY gets, the higher oil goes. There's like this correlation there where they both go up higher. So I almost wonder, like, the higher the Fed hikes rates, it kind of seems like there's a tug of war going on. I'm not sure about the geopolitics of it, but between OPEC and the Fed, where they're both just waiting for each other to blink. And it's almost like the stronger the Fed makes the dollar, the more inflation they cause, because OPEC just cuts production in response to stronger dollar.
They're definitely making some pain felt overseas. Yeah. I mean, you got China already starting to cut rates. So is this kind of financial warfare through rate setting? I don't think anybody quite knows the answer to that, but it kind of feels like
we're just caught in the middle. That's it.
Yeah,
crossfire.
Maybe we're. I was going to say maybe it's a bit above our pay grade, but I guess, JJ, I want to bring it back to you and just really kind of lay it down from a retail trader's perspective, just in the last 30 seconds to a minute. How do you think that they might position themselves over the coming weeks? Do they keep their dry powder? Do they kind of put some in and just with the expectation they could get a breakout? How do you think that they may play that?
I think retail's been capitulated out mostly. I think they've been strongly washed out. So right now it's kind of in the hands of whales and large buyers. We've seen the whale accumulation trends that we've been hitting on all summer. That's been continuing over the past 2 weeks. So to start September, we've seen whales buying. And like I said, like the liquidity in this range being drained, that's a measure of basically how much is retail getting chopped up, how much money are they losing. And they keep trying to catch the breakout or the breakdown of this range. And every time, that's when we see the pendulum kind of swing back the other way. So price moves up, that's kind of a sign that retail will have to FOMO higher. And if it moves down, we'll see then.
There's somebody accumulating on size. We should be clear. Like the past few months, there's somebody that is entering the market, and that shouldn't go. We shouldn't ignore
we can
that.
Boil it down to a list of names who it might be.
Yeah,
exactly.
We all have a few ideas.
So you don't want
not retail.
Yeah, to all the listeners out there, you don't want to get chopped up right now. So I think the play is to sort of continue to monitor what's going on, kind of size your positions for what your time horizon is. But I think in terms of a plays on pure trade, this is a professional market. So if you're not the pro, best to reconsider and kind of see what happens. All right. So with that, we're going to move on to the next segment, which is going to be a beta play, a segment we introduced last week with a slightly different title. But before we do that, I just want to talk to all you listeners out there. If you got something out of JJ's analysis, I always do, and sometimes it's Ray, sometimes it's Ben Lilly covering the market, but there's always something there that gives me reason to pause and think about how I position myself. And if you've been listening to a couple of episodes and maybe you haven't shared your thoughts with us, I invite you today to let us know what you think. We got a survey. It's going to be below in the comments. And it's for all you bear market warriors that are tuning in. We make this show for you, so you have something to think about how you're working the market. And we need your input to continue to make this show and all the other content that we're putting out there when we're fine-tuned for what you need. So I just want to pull a small plug. And now we're going to come back to the show. So now we're going to be on to the next segment, which is the beta play. The whole topic of this segment is to analyze market opportunities and ask, will they outperform the benchmark in the coming cycle? And we do this by evaluating 3 category areas: network strength, monetary fundamentals, and technical sentiment analysis. And today, after we review the data, I'm going to go around and ask each of the guys whether they expect to play to outperform or not. And for today, the benchmark is Ethereum, and we're going to be covering Cosmos to ask if it's going to be a beta play. And we're going to dive directly into the analysis. But first, let me describe the Cosmos in kind of layman's terms. So Cosmos is a network of distributed ledgers. And let me explain what that means. Unlike Ethereum, which operates a single blockchain as a layer 1 with multiple layer 2s for scaling, Cosmos aims to integrate multiple chains or layer 1s into a single ecosystem. You know, as the name implies, it's kind of like a galaxy, if you will. And you may ask, well, why would this be powerful? Well, imagine for a moment that you can open a single wallet or an app and gain access to capabilities, DEXs, gaming, staking opportunities across Ethereum or Solana or Avalanche or whatever the ecosystem is. And it was all accessible through a single app and a single ecosystem without having to think about trading tokens or consensus or delays. That's the promise. That's what Cosmos is attempting to deliver. And the main Cosmos chain is the hub, and its native token is Atom. And that's what we're going to be looking at to evaluate. Enough from me. I want to get into the analysis. And Kodi, we're going to kick it over to you to talk about network strength. So take it away.
So we're going to start with the tech for Cosmos, and we're going to get a little bit into the weeds because there's some really interesting points about Cosmos. So bear with me for a sec. As you said, Cosmos is built as a network of different chains, and they are all built with the same building blocks. And let's call them 4 main building blocks. The first one is the consensus algorithm, which is the software that the chains run to agree on the state of the network. Every chain uses it. The algorithm itself changes from chain to chain. Cosmos 1 is the most widely used consensus algorithm in crypto, not just by Cosmos chains, but other chains like BSC uses it. And it can be very performant. It's been battle tested. Through Luna, it was working perfectly, and it is a bit old, but as I said, it can be very performant. Like right now, there's a new chain called Say that just launched, which has a TPS of 20,000, for instance. Solana, which is one of the most performant chains on there, has a TPS of 10,000. And the time to finality for Say is 500 milliseconds compared to Solana's 2.5 seconds. Again, Solana is like the state of art of performant chains, at least. It was until recently. So that's the first piece. Second piece is the Cosmos SDK. That's a framework or like set of tools to build your own chain. Basically, you have a bunch of Legos that you as a developer can go pick them up and use them on your new chain. That speeds up developing process a lot. The third is the virtual machines. A virtual machine is a software that emulates a computer. It's basically what allows Ethereum and all other blockchains to run smart contracts. Cosmos has a few of them, which allows people to write smart contracts in different languages. The most important one is CosmWasm, which that's Cosmos WebAssembly. It's based on WebAssembly, as the name implies. There's also another one, or like at least 2 in development, or pretty much finalized for EVM based. That means you can run chains that run the EVM on Cosmos. And the final building block, which might be the most important one, is the inter-blockchain communication protocol. That is something that allows different chains to talk to one another and send tokens to one another in a trustless manner. We've seen how much of an issue bridges have been in crypto. Like if you're on mainnet Ethereum and you want to go to Arbitrum or Optimism or whatever other chain you want to go to, you need to go through a bridge, and the assets that are bridged out to the other chain are not native assets. There's a lot of trust assumptions in many bridges, or at least basically in all of them. Some of them are building towards a better solution, but most bridges are not there yet. And it's no surprise that like if you go to direct leaderboard, which is like how much money has been lost in hackathon and not, 5 out of the top 6 are from bridges. So that's like, yeah, long story short, that's the tech side of Cosmos.
So just to recap on that, it sounds like from a tech perspective, looking at no other elements, it's fairly sophisticated and it incorporates, I think, some of the learnings from sort of early projects in the space.
It is, yeah. Like Cosmos was built a little bit after Ethereum. Some of the ideas that it has like built on had been thought for a while. Like it was years in the making, even before it was an idea, let's say. And even if it launched a few years ago, it's very, very sophisticated, and people are still building on it. So yeah, it's a really good solution, especially when it comes to how the chains communicate to one another through IBC.
Okay, so strong tech. Tell us what's next to evaluate from your perspective.
So next thing to look at is the applications and TVL, usage metrics, yada, yada. And that is another thing that Cosmos, well, at least when it comes to the variety of applications, I think really shines. As we said before, it's a network of connected chains. And the idea for Cosmos is for every chain to be an app chain. So instead of having an application run on Ethereum, you would have it as its own chain. And that's 60 plus chains right now for Cosmos. And they go from being a normal text chain, like Osmosis is the most successful one to date, to there's one that is decentralized VPN. There's another one that is Sommelier is the front, like has some application run on Ethereum or like offers yield on Ethereum tokens, and the backend it's running Cosmos. You also have up and coming chains like Kodi, which enables writing smart contracts in JavaScript. You have more performant chains for trading, like say, as I mentioned before, an injective protocol. You had Terra, which up until it went down in flames, it was the most successful Cosmos chain by far, which, as we all know, offered, I don't want to call it stablecoin, but some sort of USD token.
As long as you didn't get a tattoo, we're okay.
Exactly. But yeah, it does offer a lot of interesting applications, but liquidity-wise and usage-wise, it's not really there. Like I think the downfall of Terra really put the damper on Cosmos. It wasn't as successful as Ethereum, it never was, but it was seeing a lot of influx of liquidity of like money and usage, and that took it back like 5 years. So now, like, if you look at TVL at the peak for all the Cosmos chains combined, it had $100 billion in TVL, which sounds enormous now. Right now, it's like just over $2 billion. Osmosis, which is probably in a sense, the hub of the Cosmos network, because it's the main DEX, the main decentralized exchange, had $1.7 billion in TVL at the peak. Now it has $100 million. It only has $6 million in stables. That's one of the reasons why Cosmos hasn't really taken off, in my opinion, is because there wasn't many stables in it. Like, you had to bridge stables from Ethereum, and up until recently, there wasn't even a good solution. That's partly why Terra and USD had so much success. And even now, you have things like Axelar, which is a bridge, and it is used, but it really, like, if you compare it to like Arbitrum, for instance, has $1.5 billion in stables, so 6 million is nothing. That can change in the near future as a chain just launched, which will have native USDC, but yeah, we'll still wait and see.
So it sounds like demand is obviously it was at its peak during the bull run. I would imagine that's consistent across most of these applications, most of these chains, not just Cosmos. But it's really dropped down. And in general, I mean, you just mentioned a lot of chains. It sounds like demand, though, is fairly low across the ecosystem. Is that accurate?
Yes, that's correct. You can find a lot of chains that are basically dead. Like, there's no demand for them. Like, there's a chain for NFT trading. I don't think you need a chain for that. And like, I don't think it will ever, an NFT trading chain could ever surpass Ethereum as the monetary premium there is very heavy. So some of these chains, yeah, it's a nice idea, but like, I don't think they will find product market fit. But I think the up-and-coming batch of chains for Cosmos can really bring in those users and liquidity that the ecosystem so badly needs.
What's interesting, a point you just made was that, with the SDK, the ability to build out chains and sort of the ecosystem and allowing people to grow, you're going to have a lot of projects or chains that perhaps don't have product market fit. That's okay. So doing the comparison to say TVL across, 600 chains isn't really necessarily the right metric. It should really be looking at the ones that actually have full potential to be adopted because they serve real utility, and then looking at their growth.
Yeah, correct. Like failing is fine. And yeah, you're gonna have some projects that just they are not as successful as others, right? I think Cosmos just needs a couple of like really successful chains or like really successful app chains for it to really take off. But we're still not there.
I'm still not there. Okay, so from a network overview strength perspective, is there anything else, Kodi, you want to share before we move on to the monetary policy with Ben?
Well, just a couple other data points. Like right now, the daily active users are sitting at 50,000 more or less, and the IVC volume, that's the volume between chains, it's sitting at 360 million over the past 30 days. So that's quite a lot of volume between chains. So you can see that let's say the thesis for a set of interconnected chains has been validated. Now we just need some chains that bring in more usage, more TVL.
Yeah, it's a fascinating data point. It's probably something that a lot of people who may look at some of the other metrics will gloss over and not realize that it's actually doing what it's wanted to achieve, right? Sort of the vision there. Okay, well, if there's nothing else, let's move on to you, Ben. I want to hear from your perspective from a monetary coverage and fundamentals perspective, Ben. So take it away.
Sure thing. And nice insight, Kodi. Some really good things to take away there. As far as monetary side of things, to sum up my philosophy, I like to break things down using this super jargony concept of quantity theory of money. It's essentially my mental model that I use to evaluate projects, and it's kind of price equals to the token supply multiplied by the velocity of the tokens all over the productivity of the tokens, essentially the economic output taking place on the network. And I've written about it several times, and for beta plays here, I won't go into all those things. I'll really just hone in on that M, which is the token supply. So to start off, tokens usage, it's mainly for staking at 75% of atoms being staked. Now that figure, 75%, is derived off of a supply figure in terms of circulating of around 300, I think, million. And it's important to note, I found about 5 different values there, ranging all the way upwards of 365 million atom. We didn't pull the data ourselves to verify it. So, as far as what the actual value is, if anybody has a more reliable figure, please drop it in the comments. Now, the token supply growth rate, again, data is a little bit of an issue here, but it's sitting at 17% per year, which explains a lot of the behavior around staking. Users, they're just simply trying to preserve their purchasing power on the network, and that's why they're going ahead and staking to get a percentage of all that new token supply. And so you can see that protocols, they really need to offer massive rewards to encourage higher order usage of the token. I believe the protocol is UMI, which has about $1 million worth of atom on the protocol, and it's offering anybody who goes ahead and adds liquidity 8%. So compared to the amount you're going to get staking, that's just simply uncompetitive. So with a staking reward that high, how can credit markets actually grow? How can they attract liquidity? How are you going to get diversity on kind of various protocols that sit on your network? So that's inhibiting growth right off the bat. So you want people to move their atom, clearly, out of staking into something else. Staked atom, for instance, a token from Stride that Kodi introduced here on the show before. And to be transparent, him and I are active stakers. I don't want to speak for you. If you're not, Kodi, interject. But we're both stakers on Cosmos and Stride. And for Stride, there's about 3.2 million staked atom, which is about $25 million worth of tokens, which seems pretty decent compared to the total supply of atom. So staking rewards, they clearly need to change if the ecosystem is set to allow other protocols to grow, get solid footing, and compete for those tokens and attract users. And I think the community, they really do understand it needs to change here, some of these things around the economics. But I fear it's rather short-sighted in terms of pushing forward solutions. I don't see any of the discussions I mentioned earlier show up as of yet, or the discussion of how to generate treasury revenue. The most recent one that I did see was Prop 82. It was a proposal that was coming through Cosmos. it was actually set to pass, but as it started to, I guess, get closer to, all the votes being tallied, it failed. And that was mostly because Cosmos creators went ahead and voiced their concern. There was a significant change to the economics. Looking at the paper, which details some of these changes, it seemed there was a limited amount of work done to justify some of the changes that were being made. For instance, if this Prop 82 were to be passed, the paper assumed the ecosystem with this new token supply rate, so inflating the supply, would reach a steady state after 36 months. I see that figure. I don't see any rationale behind why these authors arrived at that figure. I don't see any analysis. It just sort of felt like an easy way to go ahead and grow the treasury, to go ahead and fund development. When in reality, I think what we need to see is a bit of a taxation model based upon the transaction fees or some sort of rent model. This shouldn't be too hard, to be honest. The Cosmos Hub, which is different than the stat that Kodi mentioned earlier in terms of the Cosmos ecosystem, the hub itself had $124 million in flows over the last 30 days, which is incredible. Ask any protocol, is that successful? It's very successful. So capture 1% into the treasury, you have significant funding for projects out of the foundation right away. So go ahead, capture revenue, help your stakers that are not stakers, but Atom holders, preserve their purchasing power, and give the chance for protocols to compete for Atom tokens. And this should really help rejuvenate the Cosmos Hub itself. And the hub and all the founders and really what the treasury is funding shouldn't need to build it all. And I think that's the mindset that they have, that they need a lot of money to build all the different protocols. But really, you just need to incentivize the protocol and say, hey, you can go ahead and track all these Atom tokens. You really just need to figure out a way to generate some sort of yield for users without kind of diluting the user base. And so what worries me, again, stuff in the treasury was just a lack of looking back on the amount of funds they even spent, and they didn't look at the potential revenue they could generate, or even what protocols went ahead and generated the most activity in the Cosmos Hub. There was no mention of that. And so if the draftees of the proposal did this, I think they draw some interesting conclusions on what amount of revenue could be generated, possibly ask some discussions on how to bolster that revenue through better product market fit, because they're going to focus on what is actually working in the ecosystem. And then the end result, I think, would be improved business sense on how to move the Cosmos Hub to a more productive state. Like if you use a nation state, for example, if the country is a net exporter of a certain product, the government's likely to fund schools to go ahead and increase the knowledge in that industry, likely build better roads, transportation around that industry, and even establish some laws around that industry so we can thrive in that home state. So there's no need to really reinvent the wheel there. Just kind of take some lessons there.
Yeah, I wanted to ask you a question here. So if I'm hearing you correctly, just to kind of break this down for the audience, it seems to be that most of their capital is being locked up in staking. There isn't a compelling case for users of the token to move it into other products or other blockchains. Is that a fair statement? It's
a fair statement. You look at Ethereum, you look at where ETH sits in the ecosystem, and it's essentially all over the place. You got it on MakerDAO, you got it on Compound, Aave, you have it sitting over in Lido, Rocket Pool. You have it in various different buckets, and you don't have it just sitting on the Beacon chain. I think that figure is like around 20% right now. And so ETH, in terms of where it sits and how it's being used, is very diverse. And we don't see that happening in the Cosmos ecosystem.
And it sounds as if the discussion has been, rather than to think about the ecosystem broadly, to say, how do we get the parts to be able to grow, similar to what we're seeing in Ethereum. Instead, they're seeing that the treasury or the central hub wants to take in more of that funding and then move the projects out. So more of a top-down kind of viewpoint on the protocols and the apps that would be valuable.
Yeah, and a lot of layer ones, they tend to, I think, overpay for security for the validators through this increase in token supply over time and rewarding it through them, when that actually is oftentimes a hindrance because of credit markets. If that token has a better use case somewhere else, the market will go ahead and seek it out. And you can't do it when you're just trying to essentially stay afloat with your purchasing power.
Okay. So definitely some challenges, I think, just from an overall strategy on the monetary policy side. So I think there's a little bit more you had to share here. So I just wanted to ask a couple of questions, but I'll let you wrap up here before we move on to TA and sentiment analysis.
No, those are great points to really hone in on. And I think one piece in that proposal that I saw, which I think would be worth mentioning here because we're all victim to this to some extent within the ecosystem, is when the draftees were determining how many tokens to mint on a monthly basis, they determined it based upon what the speed of light was. And they wanted to keep kind of the Cosmos analogy and meme going, which if that's how you're going to determine a figure, it's likely not economically sound. As much as we want it to be that way, it's just usually not the case. And so, and just one more example here, the paper stated that the revenue after the implementation, if Prop 82 were to be implemented, the paper stated that the revenue generated from interchain security should exceed the diminished security cost under liquid staking. Should is the operative word. And I would like to see at least a simple spreadsheet showing how they arrived at this figure. No need for an overly complicated agent-based simulation model, which is what we often do for clients. But I just want to see some simple logic here. Like, how are you coming to this figure? How is 36 months, in this figure? How's 400,000 atoms the reason you came up with these figures? So to sum it up, this discussion here, if that's the proposal that was being discussed, Cosmos really does have a massive opportunity. And Kodi and I were messaging back and forth before the show here, and we did a dive here, but it wasn't a deep dive like we would like to take. And I think him and I were just really kind of coming to conclusion, like there's so much potential here that maybe we'll put together a proposal for the community and kind of let the conversation begin. It just needs Cosmos Hub. It just needs some tweaks, and these tokens that 75% in terms of staking can be better used, and a lot more productivity could come to Cosmos.
Okay, so I think for listeners out there, what we've seen or heard is that from Kodi, the tech stack is very strong. There's strong potential to build out with the SDK a really good blockchain ecosystem. From a monetary policy perspective, where they're putting their focus doesn't seem optimal from Ben's analysis. So now we're going to look a little bit more at the technical side of it, technical analysis as well as sentiment, get a different take on sort of how the market is going to be reacting to Atom tokens. So JJ, I'll bring you in and you can break down the technicals.
I guess, yeah, that was really enlightening. Thank you both for sharing that. In terms of what I see from a technical perspective, it's very much on par with what Danny was describing, is that in 2021, 2022, we really saw peak euphoria in the market just in general in terms of all altcoins. But you really saw that in kind of these beta plays like Cosmos, for example. And it was just people putting the horse before the cart and getting overly speculative, and price reached levels that weren't justified by the fundamentals. And that overextension, we kind of saw the pendulum swing back. And what it looks like to me now is that this is kind of the peak moment of indifference in the market, where the same way, people thought price would never go down when times were good. Now people have gotten so either they've lost all their money or just so frustrated by the market that it feels like price will never go up. When I shared the weekly chart here, and what it looks like is just kind of a textbook capitulation pattern happening. You see the RSI reached bottom levels. It looks like there's a double bottom there. It's showing some signs of bottoming here. We'd really like to see a big green buy volume candle come in, which would kind of confirm a bottom. So I'd kind of be happier to buy higher, almost just for that confirmation. That said, like even if it begins an uptrend from here, when things get as bad as they were for Cosmos over the past 18, 24 months, it takes a long time to repair things from a technical standpoint. So it's not something that's necessarily going to reverse tomorrow and just go straight back to up only. On the daily chart, however, we do see some encouraging signs. It's broken out back above the 50 RSI mark, looking to hold that breakout. It hasn't really been able to hold it since the beginning of 2023. So if it could really get into a new uptrend there, that would help confirm what we're seeing on the longer term weekly chart. And also, it's just a heavily shorted coin. You can see this by looking at the open interest levels, which have gone up steadily as spot volumes decreased and funding's been perpetually negative as price has been bleeding lower throughout the year. So what that says to me is that it's become a popular pairs trade, which is I'm going to long ETH, and instead of hedging it with a short against ETH, I'll hedge it with a short against Cosmos. Because if ETH goes down, Cosmos goes down more. And that's true at the beginning, but when you're at these really bottom levels, that's a dangerous trade to have on. And it still seems like people are holding on to that trade. So we're waiting on a catalyst, which could be any of the number of things Ben and Kodi discussed there. And that kind of catalyst could send it into a really sharp short squeeze, and you could see kind of a 2 to 4x movement there in a short amount of time before it catches its breath and resets. But
Yeah.
that would be a good signal of the bottom too if we finally see those shorts get squeezed out.
Yeah, JJ, I was just thinking, and when we said beta play, we kind of assumed it would outperform and in a bull market, but here it seems like it's outperforming in a bear market if you've got shorts on it.
Yeah, that's the beta play. Is that
Yeah.
further
Okay.
down to the downside.
So, no surprise here, I think, for anybody's in the market, all of the tokens on the alt side and have had serious capitulation for a long time. We've been in a bear market. We talk about it every week. So I think, listeners here aren't going to be very surprised to see some of the technicals here. I do like what you're saying. If you're going to be looking to get into this, looking for some capitulation, which would be a strong purchase or a strong bull signal.
If you're long-term oriented, this is like the perfect spot to be dollar cost averaging, right? It's like, it might get a little bit worse, but over the span, I mean, unless you think it's absolutely going to go to zero, or there's a possibility that it's not going to get too much worse than it is now from a technical standpoint. It's like as bad as it can possibly be. So
Right.
it's worth
worth
scooping a bit.
considering. Okay.
Hold it.
All right.
Especially in light of what like Ben and Kodi shares, that there are fundamental uses for this, and they're working on solutions to scale it. So there's a light at the end of the tunnel. So if you believe in the vision that they have there, I think this is a good area to begin dollar cost averaging for sure.
All right. Good summation. All right, Ray, we're going to complete the analysis with what you're looking at, which is more from a sentiment market perspective. So why don't you share with us what you think based on the data?
All right. Well, all the analysis has been fantastic so far, a mix of optimism and realistic cynicism. So I hope to fall somewhere in the middle of that. I believe that narrative trading impacts projects like Cosmos to this day, and sometimes sentiment and narrative can be stronger drivers of flow and capital rotations in the market than actual fundamentals. And sentiment can also kick off new trends that attract flow. You see that happen quite a bit with altcoins. You see that happening with NFTs. You see that happening with trend tech. Like historically, when big traders or influential individuals who have a large social following begin to shill a token or a project or a new phenomenon or trend that they think could basically give someone a 10x to 100x on an asset, then it does begin to pique interest in that asset and impact flow. And you can see that on chain and different metrics. I don't know if social dominance and social volume are on chain metrics, but a few charts that I've shared show Cosmos's social volume, social dominance on Twitter or X, and keyword search on Google Trends. And as these metrics have trended down, so has price. So as fewer people are searching up Cosmos or Atom, as fewer people are talking about Atom token on X, as fewer people are doing that whole hashtag or $ Atom ticker and throwing up charts and price projections and talking about liquid staking derivatives and Kepler wallet and all that, as fewer people are talking about the project, we see that price pulls back. And the opposite happens when more people are talking about the project. So when those metrics related to social dominance begin to surge, price has also. So currently, we can see that Cosmos's or Atom's social dominance scores are seeing an uptick. They have been kind of on a day-to-day or a week-after-week increase, and price is also beginning to go up, but it's still quite muted. The actual social dominance metrics, they're quite muted compared to previous market cycles. A positive here is one metric that sentiment uses. That's where all of these social volume, social dominance, and developer activity metrics have come from. But one of their metrics that shows developer activity on Cosmos has soared to a yearly high at 152, which is a positive, right? And developer activity is defined by the number of active contributors contributing to the project. It factors in GitHub activity, so how many events are happening on the project within the GitHub, and it tracks conversations which are taking place in GitHub about new proposals and code additions and all that sort of stuff. So that metric has been surging, and I think that that's a positive. At the same time, Cosmos is making some strides and some waves in its liquid staking derivatives initiatives, and a recent upgrade to the Cosmos Hub introduced liquid staking derivatives as a module, which eliminates the 21-day lockup period for people that are looking to unstake their Atom tokens. So that should give Atom collateral a little bit more utility within the whole liquid staking derivatives and DeFi kind of subsection of the Atom ecosystem. So those are some positives that we see happening there. But for people that are kind of trying to build out a thesis for should I or should I not be going long or accumulating Atom, social metrics are a useful kind of metric or input to keep an eye on.
Okay. So kind of a mixed bag. I think from JJ, this may be a good time to be DCAing if you have long-term bullish perspective on the token. It sounds like from a social perspective, we're seeing some movement, but not a reversal, if you will, from what we've seen over the last 12 months or so. Is that fair, Ray?
Yeah, that's fair. So, but I do think an increase in developer activity contrasted against, the actual new changes happening within the project. Those are positives.
Okay.
I think what Ray pointed out too is encouraging because a lot of times, I think almost every time is what you see is the fundamentals will actually improve before the price. And so if you know about these things, your convictions are going to get tested. And then all of a sudden there comes that one day and you'll see the big short squeeze that everybody's waiting for. It's going to test every bit of your patience, but that's encouraging that the developer activity's increased.
All right. Yeah, I agree. All right. So now the moment of truth. I'm going to go around and ask each of you, based on this entire analysis, whether you think Cosmos will outperform Ethereum in the coming cycle. Kodi, I want to start with you. What's your take?
On a relative adjusted basis, Cosmos underperforms Ethereum.
Okay. Ben?
I'm sure there'll be a brief window where Cosmos outperforms Ethereum, but if you were to adjust that a risk-adjusted basis and the ability to time it perfectly, are you going to be able to do that? That's where I sit, which is likely no.
Okay. JJ?
I'm with Ben. That said, I'm a gambler a bit, so if we're entering a bull market, I would take a swing on Cosmos for like a 6 to 8 month window and outperforming ETH pretty strongly.
Ray, you get the final one.
I don't think so. I don't think it outperforms ETH, but it is an asset to keep an eye on. It's fully retraced from its all-time high, and the market structure shows it trading at levels that it last traded at in June 2019, August 2020, and July 4th of 2022. So there's always been nice upside from those kind of cyclical lower support retest, or whatever you want to call it, bottoming events.
Okay. So 4 for 4, we're arguing that it's not going to be a beta play, although there may be some opportunities, but on a risk-adjusted level, right now it doesn't look like that's going to happen. We are going to be coming back to these projects, these reviews over time to see if the facts have changed, and if they are, we can give it another grade. But with that, let's move on to like it or spike it. Kodi, you ready to review the 3 you have here? These sound like good ones.
Yeah, let's do it.
Okay, exciting. All right, the first one we got here. Kanto Chain announces its plan to move to Polygon. Like it or spike it?
Like it.
All right, first one starting off positive. Unpack it for us.
Okay, so for people out there, Kanto is an EVM chain running on Cosmos. As we said before, you can run like the virtual machine that runs on Ethereum. You can basically clone it and make it run on Cosmos, and that's what Kanto did. And they did some other interesting things too, like they provided like core financial primitives, like a zero-fee DEX. They had a stable coin that they created, like the chain itself. And it saw some like success, especially at the start of the year. Like there were a lot of influx. People were excited about it. Had a big TVL of 200 mil. And stables peaked at 180 million on chain, which is quite a bit, especially compared to a TVL. Like people really like Kanto. They don't like it so much now. Like TVL went down to like 40 mil. Stables kind of the same. Kanto, the token itself also went down a bit from like 300 million market cap to like 50 now. And I think the people at Kanto were like, okay, what can we do now to like make people excited about Kanto again? Like, especially considering that there's at least one really well-funded and probably will be strong out of the gate EVM chain that's coming to Cosmos. It's called Beta Chain. It's bear themed, which sounds like a joke. I think everyone thought it was a joke, but apparently it's not. So they were like, okay, what's next? And it seems like the play for them is to launch as a Polygon L2. I guess that's the what they're going for. and it will be built similar to like the Optimism has its OP stack. You can you have some building blocks and can build an L2 like Base did. So it seems Canto will be doing this with the Polygon's ZK chain. So it will be ZK L2 on off Ethereum. And yeah, I think that would be good for them. I like it because it's something that like I don't think there's any project out there that's doing this right now, and it will be very interesting to see what comes out of it. So I like it as a spectator.
Like it as a spectator. All right. Something to monitor. Again, we have all of these racked up. I think we're at 60 now or so that you've reviewed. So we'll definitely be bringing this one back at the right time to see how it's done.
We need to decide what is actually success or not. Like, I think it can be funny or it can be like, oh, it can be really good. But it's not necessarily like, I don't know if it's a good thing to buy Canto now. I mean, it's down a lot. Maybe it is, I guess. But yeah.
Gamble at your own risk.
Yeah, by your own risk.
Yeah, correct.
All right. Well, the reason you may like it or spike it more based on how you share, not necessarily on price. All right, let's move on to the next one. We got GRVT Gravity raises 7.1 million in funding to build a hybrid crypto exchange. Like it or spike it?
Like it.
All right. Break it down for us.
Yeah, we don't have many details about this, and it's very in development. They just raise funding, but basically, it's just an exchange that will have on-chain and off-chain components. The on-chain components would be settlement and deposits, withdrawals, like holding your wallet and your money on-chain. So you can, at any point, like track what money is in the what money the exchange controls, and all settlement can be tracked by everyone. But trading itself is matching the matching engine and all that. Sits off-chain. And the idea behind it is like, how can we make centralized exchanges better? Especially since FTX, like people are just scared, and eventually I think it will be a better solution. You can have something that in cost and in liquidity and all this matches the quality of exchanges like Binance, but you don't need to have the same trust assumptions, and you likely won't have something like the FTX happen. And there's quite a few like interesting investors, but also like the chain that it would settle on looks like it will be ZK Sync, which is another ZK rollup that looks to be doing a lot of interesting things. It's already on mainnet. I've used it quite a bit. I think, fees are still too high or not, but it's looking very interesting. And if this launches, I think it will be a place that attracts a lot of liquidity and users.
It's interesting. It sounds almost like when we talk about hybrid, I mean, this could be a template for other services as well that are looking for certain metrics of performance, but also wanting to give the transparency of the blockchain.
Yeah, correct. And I think up until now, it was a bit difficult because like theoretically, you would want it to be settled on Ethereum or a roll-up from Ethereum. Like you want it to be secure, but it cannot be done on Ethereum, right? Like fees are just astronomically high, even just for settlement. So now that we have some rollups where costs are becoming lower and lower, I think you will see more projects like this pop up.
Okay. Well, I'm very interested to see how this progresses. If the 7.1 million is enough to really get it launched, we will see. All right, we got the last one here. I feel like we talk about Telegram every week now. Telegram launches Web3 wallet for their users. Like it or spike it?
Like it.
All right. Tell us what you like about this project.
So, well, let's go back to 2018 first. And in 2018, Telegram raised an astronomical 1.7 billion to launch a chain, the Telegram Open Network. And it didn't really go anywhere for a couple of years because they got into legal dispute with the SEC. Telegram itself had to drop its plans. Like they had to leave the project basically. But the tech was there. It was already created. So a foundation or let's say people that were maintaining the code and devs just kind of ran with it and relaunched the project in August 2020. And the entity was not affiliated with Telegram anymore, so it could go ahead. And then on May 2021, they launched mainnet. It's now up and running. Hasn't found it's a different chain compared to like your Ethereum and so on. Not it has only like 10 million TVL. But what I think can be really interesting and can find a lot of success is in like getting a lot of users to use blockchain, even if it's not so like immediate to them that they're actually using chain. Like they have a project that had a lot of success. I would say the name escapes me right now, but basically it's a project that you can buy names, like Telegram names. So your ad, whatever, like ad financial or ad, if you want to buy ad Apple and then flip that to Apple in the future, you can try that as well. And it got a lot of volume. Like it got like $120 million in volume. Yeah, Fragment, that's the name. And after that, I think the guys at Telegram were like, okay, I think we need to build something on Ton. And so they just launched a Web3 wallet. You can do a bunch of things. You can hold your tokens in there. You can send it. I think the transfers are cost free. You can trade NFTs, yada yada. And like Telegram already has so many users, and like this, it becomes trivial for them to now have a Web3 wallet. So I think like instead of like chains and financial like projects like Western Crypto try to go social, maybe it's the social apps that go Web3, and that's how you get success. And Facebook was trying this before it got shut down. So if they don't get shut down, I think this could be huge.
All right, that is very interesting. What came to mind as you were talking about is do we create these silos, right? Where Web3 kind of gives a sense of being able to move across these different ecosystems with your assets that you own. And now if you hear about it, it almost sounds a little bit like, well, within Telegram, I may have a wallet and I may have ownership. Am I going to be able to move that to another ecosystem?
I guess you would need to build bridges, but I guess the idea for Telegram is to not have to do that. Like you just want a lot of apps to Spring that interact with Telegram, and you don't ever have to leave their ecosystem. Kind of like Weibo has, I think the name is correct, in China, that there's a lot of apps that you can use, or like it's basically an all app. It's also similar to what X or Twitter is trying to do. Elon Musk has been trying to do this for a while.
Interesting times, and we'll see how this the adoption of the wallet progresses and whether or not they're able to achieve some of their ambition. So good projects this week, Kodi. Enjoyed that. All right, so we're going to move on. Ray, I'm going to bring you back. I want to hear what's on your radar, because you're the one who gives us the insights on the mining, and I know we're just a couple of months out from the halvening at this point. What are you seeing?
Well, Bitcoin mining stocks are acting like a cat on hot bricks right now.
That's a visual.
What's that?
I said that's a visual.
Yeah, it is. Like everybody's jumping off the hot stone, and you see that reflected in the actual value of Bitcoin mining stocks, which I was quite bullish on and shilling pretty hard not too long ago. And I may have turned some of our listeners into short-term bag holders, so my apologies. Even though it's never financial advice.
Nice.
My red portfolio is not your portfolio, so make sure you can tell the difference. But yeah, Bitcoin mining stocks and proxy exposure stocks are coming off their yearly highs at rapid pace. But is there a reason for investors to freak out? So right now, MicroStrategy and Coinbase are down 27% off their all-time high. Marathon is down 50% off its all-time high. Riot is down 45%. CleanSpark and Iris are down 35% off their all-time highs. And TerraWolf is down 60% from its all-time highs. What are the catalysts for such strong downside? Well, first of all, let's remember that these Bitcoin mining stocks are up 250 to 300% for the year from when Bitcoin supposedly bottomed at 15,800. So some out there might make the argument that they were overbought. Also, some of these companies that I mentioned present the constant overhanging threat of dilution, i.e. by issuing more shares for a variety of reasons, and that impacts investor confidence in that company, and it's reflected in the stock price. So go listen to previous episodes where we've discussed that in greater length. But I think the current catalyst is that the Bitcoin halving is coming up in April of 2024. Investors are aware of this. Miners are either prepared or preparing, and it's possible now to see which public miners have their books in good order and make projections on how their revenue and operations will be impacted by the halving. But projections and reality are two different things. So after the halving, we're going to see what's really up. And I think you're kind of seeing a bit of that apprehension and preparation in the stock price. the spot Bitcoin ETF applications, which we've also discussed before on the podcast, as a result of so many of those being out, a good deal of institutional and retail funds are sidelined willingly at this moment, waiting to see what the eventual result of all these spot ETF applications is. So I've got a dual-pronged theory on what might happen here and how it impacts mining stocks. It's simple. Either A, an ETF is approved, and this sideline money flows into spot Bitcoin and the ETF, effectively, possibly sucking volume out of the Bitcoin mining stocks market and into BTC, and we continue to see Bitcoin miners, at least the publicly listed ones, have like a bit of the risk sentiment and euphoria around investing in those stocks wither. Or B, a rising tide lifts all boats to the extent that the rush of inflow into the spot Bitcoin ETF also boosts Bitcoin price and the valuation of public miners as companies, which should improve their ability to further raise funds and build out their operations or participate in any mergers and acquisitions that might be happening after the halving. Ideally, this would reflect, like these actions would reflect positively on Bitcoin mining stocks as well. Another alternative is no ETF approval. It just keeps getting kicked down the can somehow. And if that's the case, then we're dependent upon macro and spot Bitcoin price action as gauges of investor risk sentiment. And we see how that impacts Bitcoin mining stocks. So to wrap up, are Bitcoin mining stocks a good buy right now? That's hard to say. Beyond averaging into the strongest companies, it seems like the wiser move might be to wait and watch. Keep an eye on the charts, keep an eye on the metrics that reflect whether or not a company is healthy and how Bitcoin itself performs leading into the halving.
That's a good breakdown. And perhaps for those who are holding some of that stock and kind of expecting to see some, or perhaps weren't looking at expecting to have the drawdowns, it's a good perspective. I did want to ask, one of the criticisms I've seen is that the debt load of these companies is quite high. And as they start to roll that over into a higher interest rate environment, it's going to really crimp operations. Do you have a perspective on that narrative?
Not one that I could unpack really quickly, but Anthony Power, you can check him out on Twitter. He does excellent company analysis, looking at all listed Bitcoin miners. What are their debt? What are their operational costs? What's their CapEx? What is their cost of production of one Bitcoin? Like, are they mining one Bitcoin at a cost of $6,500 or $10,000? He looks at like how heavily shorted they are and a whole bunch of other metrics pre-halving, and makes projections post-halving to give potential investors better insights on how the halving and how miner debt might impact their bottom line. So I think that's the best place to go get that sort of information in easily digestible charts.
Okay. That's a
I think
great.
most of them, like just to add in there, I think they're like hyper leveraged bets on Bitcoin. You can think of them as essentially because they have all that debt, and ultimately at the end of the day, them, MicroStrategy, et cetera, all these companies that are indebted and have lots of Bitcoin on their balance sheet are dependent on the price of Bitcoin going up, and that's like a cure-all for everything. So I think if we see Bitcoin make new highs, you'll see these things reprice rapidly to the upside. Right now, they're kind of priced at bargain levels, assuming that Bitcoin does eventually get a spot Bitcoin ETF and breaks out from here. I think that these are in strong buy zones if that were to happen, because right now you see a lot of the downside being priced into them and have been for a while. So I think they're in an interesting spot here, depending on what happens, obviously, tomorrow into the end of the month with
All right.
FOMC.
Always keeping an eye on Papa Powell and what they're doing over at the FOMC. Okay. All right. Well, with that, let's move into the last segment we have today, because I promised that I was going to ask the guys what underrated skill they have learned since joining crypto, because I think if you're out there and listening, you're kind of looking at your own skill set, seeing what you want to add. So I want to ask that to you guys. JJ, I'm actually going to start with you. From your perspective, what's a skill you've learned since joining crypto that is perhaps underrated by the market or by your peers?
I'd say learn to write. Big thanks to Ben for that. So kind of before I would write things, but not really, just kind of my own thoughts for myself. So it's just been fun kind of learning how to structure things in a way that people can read without it just being trapped inside my head. So just kind of putting out those analysis pieces and things like that. And also just learn how to analyze a market and then present it. And you see kind of what the competition is thinking to a lot of times, and you get to kind of actually weigh your analysis against. There's not many things in the world where you can see what are the best people doing and how are they performing. In this, you kind of have that objective barometer, which is interesting. And I think it's just cool. It's fun to see that.
So learning to write and communicate. I think that's a good one. And I peeked inside your head because I see your musical taste, and I'm glad it's getting organized with your writing. I think that's positive. Ray, I want to ask you the same question. What skill have you learned since joining crypto?
I think being patient, doing your own research, and developing a methodology that is data-based. But really, patience is the one thing that I've learned since being here. You can't really expect. When I first got into crypto, and I'm sure everyone else, everyone was just making great returns daily, weekly, monthly. And now it seems like you've got to do a little bit more research and legwork and manage your risk better and adjust your kind of ROI expectations to Bitcoin cycles. So I would like to get 400% ROI out of Bitcoin since 15,800 instead of thinking about, I just want to flip this range and get, a little 8% move on Bitcoin. And maybe that's like $800 in profit, but how much risk of loss am I at given all the unexpected headwinds that can put that position into the red? So I've become a lot more patient over time, and hopefully that's going to be reflected in my portfolio.
Patience, that's something that the market, all participants need to have, especially as you said, painted it really nicely with the market movements and the volatility can give you a false sense of speed. Kodi, what about you? What's a skill that you've learned that's perhaps underrated since joining crypto?
Breathing underwater.
Is that in Ibiza that you're doing that?
No, for real though. I gotta go with what JJ said. I think like learning how to write is something that I might not have gotten so good as I've gotten thanks to Ben in particular. So yeah, it's great to have that skill.
Yeah, great for thinking. All right, Ben, last one here. And if you say writing, I may kill you. What's an underrated skill you learned since joining crypto?
Teaching how to write.
There we go. Right. I want to say Cody's little breathing underwater is so deep in so many ways that brilliant. But what I will say is just be yourself. To be honest, if you look at football or in America soccer, like when you first start playing soccer, everybody wants to get right around that ball. We call it magnet ball. And you can kind of view that ball as the attention of crypto. And you don't need to be the person that is going to the hottest trend at the moment. If anything, just focus on what you're good at, add what you can bring to crypto, and kind of make a name for yourself, make a space for yourself. So when the attention and the ball does come to you, you got plenty of room to showcase your skills. And I think that's what a lot of people here do. Whenever they come in as an intern and they try to start to learn new skills, they always try to be what somebody else is doing. And if you can encourage them to really be themselves and really kind of explore their unique perspective, then you really get a lot of kind of genuine insights that emerge. And I would encourage everybody to figure out what they can bring to the table and just figure out how to expand upon that.
Don't be a magnet ball.
Exactly.
Read some Ralph Waldo Emerson.
I like it. All right. Well, I think those are some great takeaways and likely consistent with those that are out there listening to this. And hey, we'd love to hear what skills you've picked up since joining the crypto market, be it patience, the ability to structure your ideas through writing, or even be able to find your voice differently, as Ben has shared, and figure out your path as an investor, as a trader, as a contributor, as a builder. Let us know in the comments because I'd like to hear that. So with that, that's going to do it for this week's show. I'd like to thank our guests for sharing their insights this week. I've got JJ, Ray, Kodi, and Ben Lilly. Always great to hear what your thoughts are on whatever we're covering, be it a deep dive like we did today on Cosmos, or maybe something a little bit briefer but high impact like Ray, like you did on the mining stocks, and of course the like it or spike it. But if you can't wait until next week to hear some of this alpha, you can find all these guys on Twitter where they're hanging out and sharing their ideas. And I've listed down in the links below. You can find all their handles if you don't already follow them. And if you're looking to see the charts and graphs that we mentioned, well, we are not quite there, but we're getting closer. We have acquired the hardware. It's en route to the producer, and the producer is then going to be able to take that, set it for the live show. So in the next few weeks, you're going to be able to see our pretty faces, the pretty charts, and you'll be able to see exactly what we're seeing. So until that time, and until next week, it remains a crazy time. We know FOMC is coming. We could moon and we could bear. We don't know. So just be careful out there. Don't ape. Keep some dry powder and manage your risk. And that's all for this week. And with that, this is Marconi White signing off.